Very interesting and grueling month. Going over strategies, making adjustments for volatility, new levels of volatility. In this video, I'm going to show you what to trade. For April 1, 2020, I've gone over the portfolio calculator. I've made adjustments. I've adjusted trading systems. I've adjusted portfolios, and I'm going to go over all the details of that. So if you're a Capstone Trading System subscriber, please listen. And if you are not and are interested, please listen so you will know how we are setting this up starting in April 1, including margin adjustments. I'm going to show you some details on that and how to manage that as well. So first of all, we want to take a look at some of the trades on the day, some of the charts. We've traded. Adaptive moving average was up 3,400 yesterday, down 1,900 today. Only trade in this chart. 60-minute breakout, minus 335, only trade so far in this workspace. And Cobra Euro 4, plus 768.75. It had a losing streak, nice bounce back there. A Gold Flash, minus 1650. And Soybeans Day Trade 3, plus 212.50. Only 3 trades in this workspace. And some nice trades in crude oil shorts, plus 475, hitting their profit target on Esser Counter Trend 3. And Cobra Gold just now getting short, minus 10. All Strategy Access 5, no trade so far. So those are the workspaces you should have if you're trading these portfolios, either in TradeStation or NinjaTrader or multi-charts, if you're trading any of the All Strategy Access. And so now I want to take a look at the calculators, go over the changes we made. At the beginning of March, we made some changes, and you see I've included in green the strategies that are changed and how they are changed in the portfolio. We're selecting the new strategy in green instead of the old strategy right below it. And so there are 12 overall changes. March 1, you see the changes here, and I've detailed that in a blog post, and I'm going to show you where that is. So if you go to the CapstoneTradingSystems.com website, you will notice there is a video blog, and then you will notice there is a trading system and market updates. And it's the third post down, trading system updates for March 2020. And so I don't have a blog post yet for the latest updates. I will have that. But for the beginning of March, there were some updates. There's an order execution update for tick count trend, E-mini NASDAQ. This did not change the back test. And so we're trying to get rid of order rejects. And I've made a change on that since that time as well. And so that strategy did not change. So it did not change in the portfolio calculator. I did change an order execution and performance update for AT 2019. We simply exited at 1600. We're changing the exit time to 1600 instead of 1614. And so we also went from a range-based stop. We changed the stop loss input to false and set the stop loss to true. And so we have a stop loss amount of 1900. So order execution update for that. And you see the performance summary is not a lot different, but it does improve it. So this is the original strategy, where this is the updated strategy. You see 84.54 average trade profit, $5,700 drawdown versus 59.66 and $9,000 drawdown. So we've made those two changes. Used a fixed stop loss instead of a range-based stop loss. And then for 60-minute breakout, we also required that the VIX is less than 50. So you can read about all of these. The new update is here, and the old performance is there. You see a boost in performance. We require the VIX to be less than 50. And gap continuation we required, it's an NQ strategy required. Since we have a 15-point stop loss, we require that the highest time minus the lowest low is less than 25 of the last 10 bars, and we don't want to trade it. When you have really high ranges with a $300 stop loss, you're just going to get stopped out, and so it does boost the performance in recent markets. It's not a big change because there has not typically been this much volatility historically, and so we're just filtering out future high volatility, much higher than average volatility. And so performance update for tick pullback ES and NQ. We wait for more of a pullback. We increase the stop loss. We do change this strategy a little bit, but it's based on the same concept. And you see the latest performance for each. on this, and you see the second performance report is the old performance, and the first report is the new performance for each. This is the NQ, the updated performance, the old performance. And so those are the updates for March the 1st. You see a long list of those here, and I have the updates for as of March 23rd in this portfolio. I recommended many of you to stop trading at the end of March 16th and cut back to the 25 to 50K portfolio while we make these adjustments. And so made some adjustments on that. Let me pull this up here, the spreadsheet up here. I'll make a blog post out of this. But on so average daily range for AT 2020, we're not going to trade if the average daily range of the last 10 days is greater than 30. And we set the stop loss to a fixed amount of 2,000 instead of a range-based stop loss. Same thing for short only, Tick Pulse version 2. We require the average daily range to be greater than 10 or less than 30. And we wait 30 bars between an exit and another entry. And then on Tick Count Trend 2020, change it to a market order and require greater deviation from what we normally had, and so there won't be as many trades all at once. You won't have clusters of trades. You also wait 30 bars, and since these are 1 minute bars, you wait 30 minutes from an exit to the next entry. Space it out, slow it down during high volatility. QS3 and Mirror have the tendency to get in at the open, so we don't take trades if we're close to a limit down at the open. So if it's 4% move, an overnight limit is 5%. So if the open is at 4%, we don't take that trade, and we also don't trade if the VIX is greater than 50. Mirror, we don't take the trade if it opens down 4%, and this is 4% from the 4 p.m. close, not the 4:15 p.m. Eastern Standard Time close, or 3:15 Central. We're talking about the 3 o'clock close that is at the same time the stock market closes. So we use a maximum VIX, so we don't trade this one if VIX is greater than 30. So as VIX increases, we shut down strategies. Gold Flash at a monthly loss limit of 2,500, at a daily loss limit of 1,200. These are on closed trade basis. And we increase the trading bands deviations for volatility. So increased volatility, we increased it. There's adaptive moving average conservative. It was not added to the portfolio calculator. It was something that you can do on your own. I prefer the current aggressive version of the adaptive moving average. So as you can see, these are volatility situations. You definitely don't want to trade on limit moves and high VIXs with stops that are tight. And so we have limited the bounds for which some of these strategies trade, and so you'll trade less strategies, and that'll affect you'll trade less systems. Your margin requirement won't be as high as trading all systems. And so those are the changes listed on March 1st and March 23rd, and I sent these updates out on March 23rd. And so basically I had some of these portfolios go through the 16th, and I said, hey, this is what I recommend as of the 17th to start trading the, if you have the All Strategy Access, I said start trading either Cobra 3s and SR counter trends, or if you want to trade, if you have the 200K portfolio, trade the 25 or 50K portfolio. And so going forward in April the 1st, we have set these up with the latest strategy updates that I just listed, and you see the 200K portfolio for April 1. Here are the results. These are through March 30th, yesterday, and it's the exact same strategies. April 200K portfolio, exact same strategies, but we're trading the newer version of each. And so there are so on Mirror, it's not trading this version of the Mirror, it's trading that version. Tick Pulse V12, I've sent you the workspaces if you're a subscriber, so you should have those. Tick Pulse V12, you're trading this version instead of that version. And 60-minute breakout, you're trading this version instead of that version. AT 2019, this version instead of that, or this actually doesn't trade. So that's a new update, but it doesn't trade in this portfolio. So Night Trader is the same. QS3 doesn't trade in this, and you're trading the gap continuation 2020 instead of 2019. You're trading stock index swing day trade. That did not change. And so AT 2020 ES version 2. This one trade the new version instead of the old version on both of these as well. And on Gold Flash, you're trading the new version. So you're not all of these strategies, not all the new strategies were in the 200K portfolio. This strategy, and this strategy were not, and so and this as well as these. So about 7 of the strategies that were updated in the 200K portfolio are now traded. So it's still the same strategy. You're just trading on 7 of these, or you're trading the updated version. And you see the margins are really high. These are the TradeStation margins. So I'm going to show you what to do about that. We're going to look at the old version as well. So let's look at the old version that we were trading first. So let's look at the 200K March 1 through 2020. This is based on the updates that were sent at the beginning of March. And it went into a worst case drawdown, but it has bounced back since. And that makes sense based on new levels of volatility. So the previous old worst case drawdown is about 25K, and the new worst case drawdown is about 41K. It's bounced back. It's actually up on the year. It's up on the month. And so this 200K portfolio would have still required 200K because we had some left, but the margins went up. So you say, what do you do about the margins? And so if you've traded these portfolios, you know that less than half the systems ever at any one point trade at any one time. So if you take half of that, you're at 160K, and you take your max drawdown, and that's right at 200K. And so you're still able to trade it. And with the new updated version of the 200K portfolio, those 7 changes cut that drawdown by 20K. So some of those strategies did very poorly with those limit moves, and Tick Pulse V12 did very poorly. And so when you modify those strategies to not trade on limit moves, or not trade strategies when volatility is too high for their stop loss, you get that max drawdown back in range, making those basic modifications. And then you take a look at the margin requirement. You say about 160K, add it to that, and you get 21K. This is with the TradeStation margins. So what I've also added this risk and volatility parameters, so you can see some of the volatility rules, limit move rules, money management rules. But when you're looking at this, this margin requirement assumes all strategies would take a net position at any one time. And so during high volatility, we know some of these are cutting back and not trading. And so since they're not trading, you're not going to reach that you're not going to have that strategy trading. You're not ever going to reach that maximum margin requirement. Also, these are TradeStation margins. So if you're trading at NinjaTrader, these are margins as of today, March the 31st. And so I put these margins in here, and you can simply copy them and paste them to this column. So if you want to look at the NinjaTrader margins, you copy this all the way down here, copy, and you go back up here and paste it. And so if you're trading this at NinjaTrader, what are your margins? Your margins are 137, so they're much less. NinjaTrader margins are much less. I don't know why there's such a big difference right now in margins between brokers. So one thing you could do is you could execute at another broker while margins are high, or you could cut back. But even with the 200K account at TradeStation, based on the new volatility rules and the fact that not all systems take a net position, you should be able to trade this with a 200K account. You see the difference between margins. So the overnight margin, like for example, the first one, E-mini S&P, this is the overnight margins. It's dictated by the exchange. And then the day trade margins are dictated by the broker. And so TradeStation is currently, as of today, at 50% day trade margin for the stock indexes, and everything else is 100% exchange margin right now. And you see NinjaTrader is at 1,000. So yesterday TradeStation was, or last week TradeStation was even at 100% margin. And then while the NinjaTrader broker typically is at $500 margin, they doubled to 1,000. So TradeStation was at 13,200 and NinjaTrader was at 1,000. So huge difference between brokerage margins, and so that could make a difference. If you have that issue, there is a way to execute TradeStation signals at another broker if the margins are too high for you. But with these volatility rules, if you have the full margin, you should be should be good because of the fact that not all strategies take a net position at any one time. So that's the 200K portfolio. We're going to go over the stock index portfolio 19, and you'll notice the stock index portfolio 38, I've removed 2 strategies. So stock index portfolio 19, 20,790 with the new setup. These are with the NinjaTrader margins. Let's go back to TradeStation Margins. Go to this first margins tab, and then we're going to copy this here, and then paste it down. And let's take a look. So let's let this update for a second. I actually copied the TradeStation margins onto the NinjaTrader margins. So I did an undo on that. Now I need to copy them to this margin. Make sure that you copy them to the right place. Copy it to here. So the TradeStation margins are back on, and you see it didn't take. So let's copy it and paste it, and then save it. So when you come back, it updates those. Your account size required goes from 70K to 200K, and once again, margin requirement, you can cut that in half. This assumes all strategies take a net position. And now that we decrease strategies during high volatility and not all strategies take a net position in the same direction, you can assume that that's around 90 to 100K, and you'd need about 120K to draw to trade this on the minis, and about 12K per micro at TradeStation, and even less at NinjaTrader. You would need less at a broker that requires less margin. So all right, that is the exact same strategy as before. 2 contracts on Cobra 3, E-mini NASDAQ, 2 on these 2 strategies, which haven't traded in a while because they trade only during low volatility or as volatility is decreasing. And Tick Pulse V12 now trades. Let's look at the volatility, risk parameter, and volatility. So Tick Pulse V12 average daily range is less than 30. So the average daily range has to go less than 30 for it to trade again. So now let's look at stock index portfolio 2020 36. So we've removed these last 2. I've removed Tick Pulse V12 NQ and 60-minute breakout. Everything else is the same, but with the newer version. Once again, same strategies with the newer version on all these. And your worst case drawdown is a little bit better than what we had before. I want to go over the older versions of this just to be fair. So if we go back and look at the stock index portfolio, it went through a 30K drawdown, and then it's bounced back. It's at equity peaks now. It's done quite well, actually. It's up 65K. So if you have the capital and you want to trade, you want to aggressively trade strategies that can take trades during limit moves, you can also do that. It made this worst case drawdown. And I want to go over the VIXs. Let me show you the VIXs just for a second. So look at the VIX right here. The average daily dollar range, 30,000, it got up to 31,200 before. During the financial crisis, the average daily dollar range was at 18. So we're at higher point values now. So when you sum up the average daily dollar ranges, back here it was 18K, and now it's 31K, approaching twice as much. If it went to 36K, that's from high to low in each of these 4 markets, and just the biggest pop we've ever seen. And so the biggest drop from high to low into a bear market is highest we've ever seen. So very interesting times that we've been in, very unusual. I anticipated that we would eventually get to higher volatility. I did not anticipate it that we would do that in a low rate environment. I didn't anticipate it would happen this quickly. So I knew it would eventually happen. Let's look at the VIX sums, and you see the sum of this is the stock market VIX. It did not hit an all-time high. The average daily dollar range did, but the VIX did not. It went about 84, 85, and back here is at 89. And This is the gold VIX. This is the oil VIX. The sum of those right now is 250, which is extremely crazy. But you can see how high they've been, how much higher than they've been in the past. And so you don't have the gold VIX going back as far. It only starts right here. And so we don't have it during the financial crisis, what it was. But, you know, since 2011, it's 137 is the highest it's been. And this is based on the closing levels, 275. This is based on the closing levels. It's not based on the high levels. If you base it on the high levels, it's even higher because crude oil right here had a high VIX of 334, while it closed at, on that day, it had a close of 118, even though it's been as high as over 300. So that was extreme. And so this is the most extreme volatility daily dollar ranges we've ever seen. And so that's the reason why we've had to adjust this, taking some time to code it up in multiple platforms, TradeStation and NinjaTrader and multi-charts. And so have those all available. And now let's continue to go over the portfolio calculator so we can better understand those worst case drawdowns. And so you will have to anticipate if volatility goes up like that, if we double in volatility in daily dollar ranges higher than we've ever been before, you know, you can anticipate a worst case drawdown. And so you have to be capitalized for that or stop and readjust and scale back. And so if you have the capital for that, you can keep trading through this. And then you can also trade the adjustments as well. So these are the, let's look at the stock index portfolio 38. It is from what we were previously trading. So stock index portfolio 38 is at 47K, and it's bounced back, almost made a new equity peak. It is up only 7,000 on the month, 52,000 on the year. And you see it actually didn't make much of a worst case drawdown because we had some of these ugly drawdowns in the past. So there's a lack of diversity. You have wider drawdowns when you're just trading a lot of stock index strategies and not other strategies. And so there's a lack of diversity when you trade just stock indexes. And you see this worst case drawdown with 47K was made, and that the new margin requirement that is 338. Once again, you could trade that with less in the new setup. And so let's look at the stock index portfolio 36 strategy setup. So once again, if you cut this margin in half, 160, add 38K to that, your trading level needs to be about 200K to cover that. And let's take a look here. You have 36 systems instead of 38, so you have the same set of strategies minus 2 with the new versions on some of these, where the green is instead of the previous version below it. And so 116, 120, 54,000 in March. In hindsight, you know, we had some order rejects in March as well. Some of those went for us and some of those went against us. Margin requirements went up. It was a very tricky month to trade through this, and so it did require some additional capital. Some of those order rejects are responsible for some additional losses. And so we've modified the strategies to decrease the number of strategies traded as volatility picks up, and to hopefully manage those order rejects a little better in the future. And so this is where we are. This is what we recommend to trade for the stock indexes, the 2 different stock index portfolios, and starting on April 1 tomorrow. The 200K portfolio, we've gone over that. The same strategies as the last time with the updated versions instead. And the 25K portfolio. So the 25K portfolio did well in March. No real hiccups. It's up 16K. Huge gains for a 25. It's the range is listed as 25 to 50K portfolio because some brokers have higher margins, and we anticipated higher margins. With some brokers, didn't anticipate margins this high. And so you see 80K is the margin requirement at TradeStation right now. That will go down. Also anticipate that not all strategies trade at the same time. So if half the strategies trade, that's 40K plus about 10, 11K for max drawdown. You're at 51K again. And if you can also have the option of trading at another broker. So, but let's look at this setup here. It trades Cobra 3, E-mini NASDAQ. SR Counter Trend 2, E-mini S&P. Those don't typically trade in the same direction. It does trade a night trader. We updated gap continuation on March 1. Let's look at the old version. Do I have the old version in here? Let's see, 25K portfolio. Yeah, I put it in here, January through February, and it still did well, even with the old version of gap continuation. 17,970 actually did a little better in March, and the worst case drawdown did hold, and so it's a very stable portfolio. Let's see, let's go back to the latest. So you have the 25K portfolio that we're looking at. There's no changes for April 1 really. So we're still trading what we adjusted on March 1, which was just the gap continuation, to not trade the NQ with $300 stop loss if in the last 10 minutes the average range is over 500, or the range is over 500 in the last 10 minutes. So we don't want to do that. So this is the 25K. So no real updates. It's doing well. I'm going to show you the NinjaTrader margins for this. If you want to trade this at NinjaTrader, if you want to reduce your margins, you can trade. You can send the signals from TradeStation to NinjaTrader fairly easy. I can help you with that. If you want to contact me, if you want to put your account at NinjaTrader and have an account and a platform at TradeStation, you can send your signals to get lower margins, or you can run it in NinjaScript as well. So you can do this on your end in the new portfolio calculator. You can go into the margins tab and you can put in any margin you want in this column, or you can copy and paste mine. And for NinjaTrader margins, I'm going to show you where I get that in a minute from the website. You can paste it right there and come back over here to the capstone tab, and you'll see that the margin requirement at NinjaTrader brokerage right now is 39,360 with worst case drawdown. So you're right at 50K to trade that at a NinjaTrader broker, and to trade, if you're limited in capital and you want to make that a change to use less capital to trade, you can do that. So that's one of the options, or you could trade less strategies. So let's take a look here. There are some other portfolios. I'm going to go through the rest of this with the NinjaTrader margins, and where I'm getting that is on TradeStation, the TradeStation site, pricing, futures margin rates, and you can see what all the futures margins rates are. This says 25%. The website is incorrect. It's higher than that. And if you go to a NinjaTrader broker, ninjatrader.com blog order desk updates up here, and then click on this exchange initial margin, and you'll get this sheet, and you see the day trade margins. Yesterday they had margins were, they had a multiplying factor up here for margins, but today they do not. So I don't know. I just went on ahead and multiplied the day trade margins by 2 because that's what they were. And so that's where I got the information in the calculator, is to multiply the day trade margins for each of these strategies by 2. And you'll see in the calculator under the margins, the overnight margins between these are the same, between the brokers are the same. It's just the day trade margins are different, vastly different. And so they can really affect your account level. And so let's look at some of the other portfolios that did well in March and did not change. We had this 100K portfolio, day trade only, that I developed at the end of February. And so it's at equity peaks. It didn't do too bad, and just adding the new versions of each of these as well, it shows 42K in March, really big month. This is a really good strategy. I haven't talked about this portfolio that much. It was just a day trade version, and it includes kind of the SR counter trends. So the SR counter trend portfolio has been one of the hot portfolios to trade, and then this one also includes some of the day trade strategies from the stock indexes that aren't SR counter trend, such as the Cobra 3s. And so this is one to take a look at, and it's 94K in NinjaTrader. It'll be higher in TradeStation. And the liquid day trade portfolio, let's see, I want to take a look at the drawdown curve here on this one first. So you see the drawdown curve, it didn't do too bad in March. It didn't, it came into a normal drawdown because mainly it's SR counter trends. And so that's the real It's one to watch, the 100K portfolio along with the SR counter trend portfolio. Liquid day trade portfolio, 25,365. Let's see how it did in 27K here, and it didn't have much of a drawdown at all in March, and so it did really well. As you can see, it includes a lot of the SR counter trends, and it includes the Cobra 3s and the tick count trends. See, if the Cobra 3s and the SR counter trends, good combination of strategies here. Let's look at the SR counter trend portfolio. And so the SR counter trend portfolio is all the SR counter trends, 2, 3, and 4. Did 21K in March. It just acted like a normal portfolio. You see very little drawdown. Really nice results. These things are cyclical. You know, when the other portfolios perform, this one could underperform. And so it is a good portfolio to trade. And you see the results here. 21K in March is kind of really averaging out the other months. Really consistent so far this year, and a portfolio to look at. So the portfolios that aren't talked about much that you could also look at is SR counter trend 2, 3, 4. And then a variation on that is the 100K portfolio day trade only, and the liquid day trade portfolio, which includes a lot of the SR counter trends, as well as some of the other stock indexes. So, and the rest of these are older versions of of the current portfolios. So the main portfolios to look at now, starting April 1, are the stock index portfolio 1936, the 200K portfolio, the 25K portfolio, and the 100K portfolio, liquid day trade portfolio, and SR counter trend 2 through 4. So that is the portfolio updates, long video, mini webinar. Hope you're able to pay attention. Let me know if you have any questions on any of this. I'm going to upload this portfolio calculator today, as well as at the end of the day, for results through March 31st. And you know, you can look at the risk and volatility parameters. You can look at the margins here. You can make those adjustments. And I'm going to upload it with the TradeStation margins, since the rate will be higher, and I want to err on the side of caution. And so I'm going to put those back here, and I'm going to upload this after I make this video. So by the time you see this video, you'll have this latest version of the portfolio calculator, also the latest version of the workspaces. I've sent to you if you're a subscriber, so you should have those. Let me know if you have any questions on setting this up. Looking forward to April. Each time there's new volatility, it will teach us a lesson in how to manage our strategies going forward. So confident in what we're doing going forward. As you can see, these portfolios, they ended up doing well. Even though they made a worst case drawdown, they all bounced back and did well. And so the main concern here is what to do about higher margins and how to manage limit moves and higher volatility. And I think we've covered that in this video. Once again, let me know if you have any questions.